Hello everybody, good morning, welcome back. Welcome to the Capital Hungry New York scalping session and market analysis stream. How's everybody doing this morning? Currently 7:15 a.m. Eastern, Wednesday, November 17th. Morning, night, depending where you are in the world. Can I get an audio and visual check before I start spewing out information for the next 2 hours? I think my friend Raja Banks is also streaming today, so I don't think I'm going to get too many viewers today. That's okay, because everybody is in the gulag this morning. Everybody's good? Okay, perfect. Okay, let's get into it. Let's just hop right into it then. Let's go through the nitty gritty first. Make sure you guys go through all of the resource links provided on the stream layout as well as the YouTube description and on your screen right now. Tons of free resources provided to the community by Capital Hungry, and they're all at your disposal, right at your fingertips, a click of a button away. Okay, so stream reminders. This is not financial advice, but after I go through, like I have a set schedule I go through. You can see it in the description. We pretty much have this systematic approach to the markets, and first we look at some of the key fundamental points in focus, then any economic events we have impacting any of the pairs, commodities, or currencies we may be trading, then looking at market sentiment and investor behavior analysis, followed up by me going through individual analysis and marking out trade ideas for scalps and day trades on gold, GBP Jpy, GBP USD, Euro USD, USD CAD, and US 30 in that order, right? So if you have any questions, just let me go through that entire process first and save your questions for after that, and then I'll make sure to check it out. Because most likely, if your question is about any of the pairs I just said or economic events, I'm going to go through that stuff anyways, all right? Please do not spam the YouTube chat asking for direct signals. Any questions about the Capital Hungry private channel service, just go to the website or message me on Telegram. And the rest of the bullet points on the chalkboard are just all of the Capital Hungry free resources, which is also linked in the description, okay? Now, before we really jump into it, I want everyone to understand that, yes, we are here to potentially make money and profit out of the markets, but as manual retail traders, our first goal is capital preservation and survival in these vicious, corrupt, greedy markets, okay? That should be your primary focus. Number one is surviving before you start thriving, okay? So, with that being said, make sure you follow your trading plan, follow your risk management plan, focus on the long-term visions, keep emotions out, and avoid crashing your account. Fuck everything you hear on social media by these marketers telling you about 90% win rates, never taking losses, only showing huge profits, avoiding ever sharing any value or analysis, talking about monstrous 1 to 20 risk versus reward ratio trades they get. None of that is realistic. All of that is usually just to sell a service, sell some signals, or sell some algorithm for you to pay into to make them a lot more money, all right? Like, for example, all of you, let me just show you guys. The focus is on risk management and having realistic expectations towards how to approach the markets and focusing on the risk versus reward ratio. What I mean by that is if you focus on a simple 1 to 3 risk versus reward ratio, you can sacrifice having a 50% win rate on your overall trades and still be extremely profitable. Depending on your trading style, scalping or intraday, none of that doesn't matter. The focus is on the risk versus reward, as well as at least maintaining a 50% win rate with a 1 to 3 or even higher risk versus reward ratio. So let me just show you guys. I'll open it up right here. I'm not going to be trading this week because I already made pretty good money last week. Right? So you can see this is the last month's worth of trades. But what I want you guys is to look at the total amount of trades and understand that I'm only focusing on gold and GJ, right? So this is 30 days worth of trade information, and look at the number of wins versus the number of losses. It's almost a 50-50 there. I actually had a couple more losses than overall wins, right? But even though the number value of these losses may seem large, in relation to the lots that I'm using as I've developed my trading over the last 5 years, in general, these are all 15 to 20 pip losses, except about 3 losses where I made emotional errors and was stupid and removed my stop loss backwards. You know what I mean? So there's about a few losses here that were like 40 pip losses, and it was me making emotional errors. Like this one here was a pretty large. There's about 2 or 3 that were actual emotional errors. The rest of the losses, even though it seems like, oh, I took quite a bit of L's during that month, they were what I like to call controlled losses at a pre-planned stop loss that is sticking me towards a 1 to 3 risk versus reward, right? So besides this $4,000 loss and one of these losses up here, which was 40 pips because of me getting emotional and extending my stop loss, the majority of my other losses were following controlled stop losses and pre-planned analysis versus the wins, where I have an equal amount of winning trades versus losing trades, but instead of the wins being that 10-20 pips, you can see the majority of wins are 100 pips, 60 pips, 50 pips. So the winning trades overmask the losing trades. The issue is majority of people and marketers will tell you that you need some type of 90% win rate, and that really puts a pressure to perform on you and has you avoid focusing on the risk management and avoid focusing on the risk versus reward ratio. When you think and have the expectations that you're supposed to have a 90% win rate, 80% win rate, you have this constant pressure to perform and always be on a win streak. And then when you finally do take a loss, you cannot psychologically accept that loss, and then you end up revenge trading, over leveraging, and burning through your entire win streak and going back to zero, right? The focus is understanding that losses are normal and expected, and it's inevitable that you're going to lose in the markets at one point or another. And the focus is the risk management, and on your trading journey, taking a few steps forward and a couple steps back, with your overall account growth being bullish and moving up. The journey and success in trading is not a straight shot arrow. It's not a straight path to success. You're not going to win 100 trades in a row when you first come into the markets and make 6 figures or become a millionaire. It's a slow and steady grind through a period of years, right? So this is what, I'm not saying you should strive for this, but I just want to show you guys an example that you can clearly see I took a lot of losses, and some of them were stupid losses like I explained. But focusing on the risk management, focusing on the risk versus reward ratio, even with the 60%-ish win rate here, the wins outmask the losses thanks to focusing on a positive risk versus reward ratio and also mainly staying in emotional control. And you can see still a pretty significant profit for that 30-day period, right? And also, please do not think that using these types of lots or having this type of consistency, I guess you can call it, comes overnight. You have to understand that my first 2 years of trading was failure. And then after I started to get consistency in 2019, you can see back in the day when I was still doing analysis, it was the same idea, but penny lots. This is 2019 period trading gold, trading GJ and these other pairs. right? Same idea, fundamentals, technicals, looking at economic events and so forth. But back then it was penny lots, right? So I don't mean to like, I'm not trying to show off. I'm not trying to show off. I'm not trying to flex or anything like that. I just want to make sure that all of you have realistic expectations while you're on this journey. Does that make sense? All right. And this is very, very important. I'm telling you this because through my 5 years of being involved in the markets now, you have all seen that you have all seen that I have grown a strong experience as well as understanding of the economics, fundamentals, and technicals, right? And I'm going to tell you right now, the technicals and fundamentals and economics is the easiest parts. It is very easy to learn how to technically map out a chart and backtest charts. It is very easy to go read definitions and learn about economics or fundamentals, right? The hardest part is the trading psychology. So I'm just telling you this from a point of experience that don't focus the most on the risk management and trading psychology, on your own emotional control, on developing better habits, on removing bad destructive habits, on learning to be very objective, focusing on the numbers, risk management, probabilities of the game. All right? Focus as much attention as you can on that. But anyways, enough about I just wanted to give that little psychology talk, that little pep talk, so people have realistic expectations. The majority of shit you see on social media from Instagram traders is really just nonsense. You know what I mean? It's just to market to people who are looking for fast, easy, quick money with the least resistance to get them to pay them and become a customer. That's not the way the actual markets work. There's a reason why 90 plus % of retail traders consistently lose or quit. If it was as easy as they showed on Instagram, that statistic would be the opposite. Everybody would be a winner, but that's not true. And the market is made up of more losers than winners. The losers pay out to winners at the end of the day. Right? Okay, so now that we're through the stream reminders, as well as that mental reminder and psychological reminder, some key fundamental points. The Feds, as well as Bank of England, are still dovish towards economic growth and avoided rate hikes or further tapering. So we can see that this led to some solid upside on gold. At the same time, US inflation was very high, and US dollar bulls came back to the table accordingly with that as well. Global equity markets are still rallying, and JPY is still bearish. So we can see that over the last week, we've had inflation figures come out, which obviously higher higher economic data inflation, as long as the other side of PPI is still steadily increasing and economic activity is still at a high, is a positive for the currency in terms of its scale on the global stage. So what I mean by that is inflation is very bad for us, the 99%, the consumers, because you have a cost of goods increase and so forth. But inflation is only bad for the currency when inflation is extremely high and economic activity is low. That means that the cost of goods within the economy have gotten too high to a point that it's not affordable for the consumers anymore. So there's a massive decrease in spending. Then inflation becomes at a risk factor. Does that make sense to everybody? But when CPI is high and increasing, but the flip side of producer price index is also equally high, and consumer economic activity is also still healthy, this is considered a positive for the currency. That's why you saw with the US inflation, dollar still pushed up, and last night we had UK's inflation data, GBP, which pushed up GBP. Does that make sense to everybody? So yes, inflation is extremely high right now, but it's not at a high risk point where it's stopping consumers from spending money in the economy yet. Does that make sense? And also, high inflation globally whether it's for the US or US having the larger impact on gold because we trade XAU USD, high inflation around the world is a bullish fundamental factor for gold because investors hedge increasing inflation risks by pooling into gold. Okay? Now, economic events here. You can see we already had the CPI data and producer price index data from UK, which we all expected, which was given in the... Who here watched the Monday market update webinar? If you watched the Monday market update webinar, you should have caught some great trades on GJ, on US dollar pairs, and so forth, which I'll be reviewing after this before we jump into our main analysis. But we've already shown a steady increase in inflation that led to that positive impacting factor on GBP and led it to push bullish overnight. This increase in UK inflation also had the impact to keep gold more bullish overnight after having this pullback from highs, which we'll be talking about in a second. But in terms of what we have going on today, in an hour at 8:30, we have US and Canada economic data with US building permits and housing starting numbers, and Canada's CPI inflation figures as well, which this is also going to be high. Canada's CPI and inflation is going to be high. Every country's inflation is increasing and high right now, which is a potentially continued bullish factor for gold. Okay? Now, when we're looking at market sentiment, you can see the Japanese yen is still bearish. So in the short term, we've been playing that weakness in the yen to our advantage with GBP JPY pullbacks that we called during our Monday market update webinar from the lows, right? You can see from these new lows printed on GBP JPY, the same time the Japanese yen is bearish, and we had the stronger UK economic data, we had this continued upside to do a deeper pullback on GBP JPY, which that analysis was given for free on the Monday market update webinar as well. But we're going to come back to that and talk about that after we do the gold analysis first. Okay. So we're still going to be looking to play that weakness in the yen, and we're still going to be looking to play this individual US dollar strength as the dollar index peaked new intraday highs. And as the dollar is the world's reserve currency and business currency, it holds a lot more weight in its respected currency pairs. For example, you can see the same time that the yen is bearish and GBP was holding some strength, GJ had a pretty solid run and pullback from its new lows printed, right? Almost a 200 pip run. Compared to GBP USD, where the dollar's holding a lot more strength, you can see GBP USD's run has been minimal and it's been more in this intraday range. That's due to the weight the dollar holds regardless of what currency pair it's in, because of the fundamental factor of it being the world's reserve currency. Okay? Now, let's do some analysis on gold. So, if you guys followed the Fed rate prep analysis webinar here, and if you followed the Monday market analysis webinar, you would understand that we were looking for the curveball scenario on gold, which means the Federal Reserve not being aggressive towards tapering and still being pessimistic towards economic growth and recovery, which they were. The last FOMC at the start of November was a copy and paste of the September FOMC, and also had the Feds as well as Jerome Powell, when he presented, talking in more of a dovish tone, which means more pessimistic towards economic recovery. He was talking about supply chain risks. He was talking about needing more people vaccinated. He was talking about the risks regarding Delta variant, how maximum employment has not been reached yet, and he did not bring anything new to the table regarding tapering or future interest rate hikes that wasn't already known in the September FOMC. So that led to a upside move here on gold, with the following daily candle have a continuation, which we started to play from the Fed rate curveball analysis exactly 13 days ago, right? Which is on for free on the YouTube as well. Then here, this spike down was the NFP day that week, on the Friday that week. Due to the Federal Reserve sentiment holding more weight for investors fundamentally, with stimulus staying active and interest rates being low and remaining low, this is a bullish fundamental factor for gold as a precious metal safe haven and commodity. So NFP ends up doing a liquidity grab, getting faded out due to the Fed sentiment, then continuing this bullish market structure, creating this consolidation and order block, collecting more buy orders in this area here. You can see we have more buy orders collected. Then this impulsive move was from the US CPI data being extremely strong. Strong inflation data has investors hedge inflation risks by pooling into gold. You see this massive upside move. Then we create this price point of interest and demand zone here, where we have this high printed, pull back to collect more buy orders, extending up into these new intraday highs here. Then just yesterday, to start off the week into this fresh week, we had some stronger US economic data with retail sales, right? So this is what I mean. This is why the US inflation was increasing, but retail sales was still relatively solid as well, showing that economic activity in terms of consumer spending has not seen a drastic drop, right? That's why the US dollar was still so bullish on all that economic data. But anyways, the stronger retail sales and also the industrial report that came out an hour later yesterday led to short-term weakness on gold and a decrease in demand on gold, but still maintaining the overall bullish market structure above this 1845 price point, right? So we have to understand, yes, we had this pullback, but the way gold behaves, having pullback phases that don't break the overall bearish market structure is 100% completely normal, right? This pullback also came from buyers printing a new intraday high. So they printed the new intraday high, just like here, here, and here. We saw some profit taking and a pullback created. The pullback goes to a more favorable demand zone to collect buy orders and still continue bullish. Last night, we had a support created at our 1852 key level. So for the private channel, as you can see here, some of the members who took it here, and Sakim called it out overnight as well, they were riding these various gold buys, like you can see Darren here, the gold buy from 1855, for example. They were riding these gold buys from 1852 and 1855 because we still maintained bullish market structure above this point. We created a support and came above our 1852 key level with a break in retest. And what did we have overnight? Overnight, UK's inflation is still high. So that still kept gold above the 1852 base and led to this upside push here so far, as UK's inflation CPI is still high and increasing, right? So now, in terms of trade ideas, as we're back in this range right now, I'm still in a bullish bias on gold, looking for potential retests and double bottoms at 1852 buys or 1855, or breaking back above the previous intraday high price points at 1868. And the safest buys would be above 1876. So this is what I'm going to be looking for the New York session and potential intraday trades. I would personally only be selling gold if we break below 1844, because breaking below 1844 validates a lot more seller order flow in the market and exhaustion from these highs, and would validate breaking bullish market structure from below this price point, which would give us a nice range back to this order block to take advantage of. But other than that, that is the only way I would be shifting into a bearish bias on gold. Otherwise, ever since the Fed rate, all we have been doing is looking for consolidation zone and buying at the lows of the consolidation zone or breakouts of the high, break in retest at historical key levels here, higher time frame key levels or breakouts, and just playing the gold bullish bias, right? Does that make sense for everybody? So I'm in a bullish bias on gold. The reasons being the Fed curveball that was thrown, global inflation increasing, and more specifically US inflation, very strong bullish market structure with buyers just continuously printing highs, having consolidation or pullback phases, printing highs, and can overall continuing its way to the upside when you're looking at the raw market structure. Right? So those are the price points of interest. I'm going to be looking for the buys that was just given there. Okay? I don't really like to buy in this current little range we are in. We do have some lower time frame bullish, like the buys were at either 1852, 1850, 1852, 1855. Now we're back in this bit of a messier range. You can see price action gets a bit messy here, where the next set of buys would be playing back above these intraday highs with a pretty clean range back to 76, or if we get retests at 55, 52 again. Kerwin's in the house. Okay, GBP JPY. So you can see that ever since the Bank of England sentiment, GBP JPY has been a lot more bearish due to the Bank of England not hiking interest rates. And we had this pretty strong extended sell side play back to this prior demand zone here, where we're getting a pretty aggressive bounce right now. Right? But overall, I'm still keeping in mind that yes, the Japanese yen has some short-term weakness, but this is still a potential pullback in relation to the impulsive drop we had here accordingly. Impulsive drop, still in pullback range, where if we don't have clean breaks above 154.5, I cannot see any further buys above this price point. Okay? So you have to look at the price action as well, and the way that GJ behaves, whether it's in bullish trend or bearish. You're still having these consecutive lows being printed, but from these lows being printed, you have correlated pullback plays that don't break the overall bearish market structure, go to collect more sell orders in the market from a significant price point of interest, and then continue right back down with the impulsive move to go print new potential lows. All right? Now, this is the intraday analysis looking at the market structure and weakness in GBP due to the Bank of England sentiment. But currently right now, with live price action, it is too bullish right now to start selling. We do not have any exhaustion confirms to start selling yet. We would need a break out of this corrective pullback structure here, with the safer sells really being below 154.2 and 154 to take advantage of this range. Who the fuck is this guy? Some spammer? All right. As long as we remain above 154 still, I'm still short-term bullish. Does that make sense to everybody? Which we're going to zoom into the price action and show you guys now. All right. So now though, even though we're coming to that very significant price point of interest, currently price action is still too bullish. we're still having stronger, more consecutive, larger bullish candles printing intraday highs with just these minor bearish pullbacks and blips. So even though we're at a significant sell area, we do not have enough exhaustion confirms to start selling yet, which the safer sells would be below these price points. Okay? So what I'm looking at on GJ, playing the current weakness in the Japanese yen as well as current price action, is still playing some potential upside that could even come up to 155 before getting rejection, right? So when I'm looking at GJ, 154.2, break above 154.5, I would only sell below 154 flat. Okay? Current price action is too bullish with buyers continuously printing these intraday highs. We're just having these bearish little pullback phases that you can see doesn't break this structure that's been intact ever since the start of the new week. Right? Just these minor pullback phases that get faded out and you still continue chugging bullish. So no point, like just because we're at a potential sell zone doesn't mean we have the current price action confirms of rejection to start selling yet. Does that make sense to everybody? The current price action is still too bullish. Even if this candle closes weaker bearish like this, you still had this pullback, rejection candle, grab liquidity, close bullish over 0.200, bullish engulfing, another liquidity grab candle where New York Open can still eventually pop above 0.500 and still continue chugging in this corrective structure. Okay? So I'm only looking for sells if we cleanly break below 154 or come to 155 key level and reject. And the green boxes for the time being are still buy zones. Mr. Targets, that was something we were just talking about, right? So that inflation data is still in relation to the economic activity going on by consumers. What I mean by that is, and what you're saying by conditioned consumerism is exactly what's going on. Inflation is increasing and cost of goods are increasing, but people are still actively spending money and have not withdrawn from that. So inflation only really becomes a huge risk when it leads to a decrease in consumer spending because consumer goods become non-affordable anymore, right? But when you have the producer price index and cost of goods from the producer side still increasing, the consumer inflation increasing, but economic activity is still high or healthy, then this is called healthy inflation to an extent and has a bullish factor on the currency on a global scale because it brings the currency value to a higher state, right? Compared to if inflation was very high, let's say at hyperinflation levels and cost of goods is going up and the producer cost of goods is going up, but now cost of goods are so high that people are not spending as much money anymore because they can't afford it. Now this is a very high economic risk, right? So the inflation game and the concept of inflation has always been a balancing act. And it goes in relation with other figures such as employment, how many people are still working and getting paychecks within the economy. How is economic activity and consumer spending looking in relation to inflation and so forth, right? So inflation is increasing across the world and in various countries. Cost of goods are going up, but they're not at a price point where it's slowed down spending yet. People are still actively spending a lot of money within their economies. Does that make sense to everybody? Inflation becomes a risk when cost of goods become too high and economic activity in terms of consumer spending then drops. Now you're seeing some big issues. Or inflation becomes a risk when inflation is very high and there's not strong enough employment. not enough people working within the economy, producing and getting paid. That's also a very high risk as well. But right now, employment has been good with jobless claims overall going down. Overall, when you look at employment claims though, Mr. Targus, it's been dropping, right? Let me show you. Even though we had one report that was an increase, you don't want to look at the one report as the set all be all. Let me show you here. No, actually jobless claims, which is the unemployment claims you're talking about, okay? You have to look at this chart here and understand that the central bank and economists are looking at the economy from a macro perspective, not report by report, right? So when you're looking at jobless claims here, and you're looking at it over the last year, we only had this huge spike during the pandemic lockdown, right? Ever since then, jobless claims as well as unemployment rate has been steadily decreasing back to healthy pre-pandemic figures. This being pre-pandemic figures here. This being a huge increase in jobless claims due to the lockdowns and so forth. But really, since the last like 5 months, we've been coming back to regular figures on jobless claims. So the labor market in the US is actually looking solid. Non-farm payrolls is at healthy pre-pandemic figures. Unemployment rate is at healthy pre-pandemic figures. Same with jobless claims. So with the labor market still relatively solid and also economic activity still solid, a lot of the inflation has been more translated into the financial markets, with the stock market being so artificially inflated, with commodities being so artificially inflated, with assets like real estate in the US and North America being so heavily inflated. But this inflation is good for the investors, for the stock market buyers. They don't mind that inflation, right? We've only now recently started to see the increase in cost of goods and inflation starting to impact consumers. But consumers are still actively spending money. The inflation isn't so high that the cost of goods are triple the price, where consumers are being more frugal now because they can no longer afford goods they used to be able to afford. Does that make sense to everybody? Yeah, so we're going to be watching price action on GJ here through New York Open, and we'll adapt to live lower time frame price action accordingly as well. You can see even on the 1 minute time frame right now, after this high was printed, we had a bit of a pullback phase, but we're still very bullish here on the lower time frame as well. We just need the breaks above 0.500 or the retest from 0.200. Yeah, of course, continued increase inflation at this rate will for sure be a concern in the future, because you cannot sustain the current levels of inflation for another consistent year. Then you're going to really see it start to impact people's cost of goods and consumer prices, and potentially reach hyperinflation stages. Right? But that's why the central bank is starting to jump in with tapering asset purchases, starting to look at future rate hikes and so forth to combat the inflation increases that they cause at the end of the day. But that's a topic for another conversation. All right. Now, GBP USD analysis. We can see that GBP USD on the intraday time frames is still bearish, as the US dollar has been so bullish, right? We have sellers continuously printing lower lows and just having correlated pullback phases that don't break the overall bearish market structure and collect more sell orders from better supply zones and price points of interest before continuing down once you have that break of the corrective structure and US dollar domination, right? When we're looking at GU right now, we're at a significant sell price point of interest, but also just consolidating on the intraday time frames, similar to here, for example, and now similar to here. Until we have a break below the consolidation, it's just best to play and scalp the consolidation accordingly. What I mean by that is, I can't see the safer sells until we break below around 1.34, and then playing the market structure as well as fundamentals of US dollar strength, I can easily anticipate further sells to revisit these lows and potentially dig a lot lower and deeper. Right? So when I'm looking at GBP USD for the time being here, we can see we have some potential rejection at this area. And if US dollar strength still holds, this will be a high risk, high reward sell area. But the safer sells is really below 1.134. As you can see, this consolidation is best to avoid. As a scalper or intraday trader, when you're looking at the candles in terms of the wicks, the candle bodies, you're not really getting any clear directional bias of if sellers are holding more strength or if buyers are holding more strength based on price action. You're just in this consolidation zone. You have an indecision between the movement of buyers and sellers as we're potentially collecting sell orders, but we need to validate that with a break below this zone and a break below 1.34 to take that 30 to 40 pip range to the downside. Right? Because we have this little bit of a tug of war here on GBP USD, the same time dollar's holding strength and we're still respecting the overall bearish market structure. The UK inflation data led for a bullish impacting factor on GBP like we saw on GJ and kept GU more bullish in this consolidation zone, retesting these highs. But I personally would not be taking any GBP USD buys unless US dollar world reserve currency goes bearish and we have a break and retest above the bearish structure and above 1.35 level. I'm still just looking for the potential high risk sell entry areas or waiting for the consolidation to complete and a break to the downside for the continuation with the trend. Right? Confluence is playing the US dollar strength and domination right now, where dollar on the 4-hour time frame here is extremely bullish. Has the potential to do a pullback, which we will have to watch accordingly, but for the time being has been extremely bullish. And when you're looking at the price action here, it's just doing a bit of a pullback after new highs have been printed again, which is completely normal to have these breathing periods where you consolidate or do a little bit of a pullback and still overall continue to the bullish upside. All right. Euro USD is pretty much the same idea as GBP USD, except Euro individually in terms of the basket of risk currencies has not nearly held as much strength as GBP. The ECB, Euro Central Bank, has been a lot more dovish towards economic recovery and a lot more straightforward of keeping stimulus active, as well as Euro data hasn't been as impressive as other regions. On top of having the on top of having the individual US dollar strength, we're continuously seeing sellers primarily print lows, have little pullback and consolidation phases, and overall continue to the downside. Right? Right now we have the potential for a pullback to 1.36, in my opinion, to potentially then have some further sells and continuations down. But the CFTC chart shows more investors are bearish for the dollar. Bro, I don't give a shit. I'm just looking at this. I'm gonna look at this chart right here, and this is the dollar chart, and I'm gonna go like this. Oh shit, dollar's bullish. I'm just gonna play this, all right? I didn't mean to make fun of you, but about that question or statement. but CFTC, but this is the US dollar chart, dollar currency index. It is very bullish, all right? It's bullish for the fundamental catalyst of the Fed curveball and them still at least starting the tapering. It's bullish from the inflation. It's bullish from the economic data. It's bullish from the retail sales yesterday. It's bullish price action, bullish market structure. I'm just going to play that. All right. But Bloomberg said dollar going to go down, but but CNBC said dollar no good. No, I'm just playing around. Yeah, if dollar was that weak, Euro USD and GBP USD wouldn't be this bearish, all right? So anyways, everybody, if we hold above here, these candle bodies, I see some short-term buy scalps to retest better sell areas. Let me go on the hourly time frame so you can see it better. So above here, don't be shy to ask questions. I'm just teasing. We can roast, you know? Trading is a very vicious game where you're going to have a lot of emotional control. So don't take some roast so seriously, you know? Or if we don't break above there and we just break back below 1.31 or below these lows, sells. The only reason I see potential pullback is just because we printed new lows and we're having this little bit of lower time frame pullback structure here being validated for the time being. You know? Still we'll look for sells there, sells here, sells below the lows. Junior Wayne. Junior Wayne, you asked the question about gold. Everybody's telling you to review the video because we already went through gold. You know what I mean? The gold analysis was, if you rewind this stream, the gold analysis was already fully given. Fundamentals, technicals, trade ideas. I don't know, some of the people here can tell you the timestamp. I don't know exactly when I was talking about it, but that was the first pair we broke down. Yeah. All right, so it's New York Open right now, but we're still just finishing up with these trade ideas here. UCAD played out great. We're playing the bullish bias on UCAD as oil is starting to consolidate and show a little bit of exhaustion and getting a bit softer for the time being. I'm still looking for double bottom. Buys, break above 258 buys, break above 26200 buys. US dollar individually, dollar index is bullish. USD CAD is moving the inverse of Euro USD and GU, playing that dollar bullish, with buyers continuously printing intraday highs, only having some pullback phases to collect more buy orders in the market, but overall still making our way to the upside. The same time that oil starting to show some consolidation, softening the Canadian dollar strength, and that is what I'm looking to play on USD CAD. Okay, last but not least, US 30 stock market index. I'm still bullish on the stock market index. There's no reason to fight the Federal Reserve support. There's no reason to fight the whales who are riding the wave of the Federal Reserve. There's no reason to fight the bullish market structure. It looks like stock market buyers around the globe still want to continue to extend their buys into the end of the year and into the historical Christmas rally. I'm looking for an NYSE pullback to 36K flat for potential buys here, or buys above 36,300 or all-time high break buys. Yeah, exactly. Okay, so far we went through mental reminders and trading psychology. I even showed you guys like my trading slip-in sheet to show you guys realistic expectations. We went through a psychology reminder, mental reminder, risk management reminder. We went through fundamental points and what fundamentals we're focusing on. We went through the economic events on the docket and what economic events we're focusing on, as well as the economic events we already had throughout the week and the market impact. We did full fundamental and technical analysis and trade ideas labeled on gold, GJ, GU, Euro USD, USD CAD, and US 30. Now it's 5 minutes into New York Open. We're going to go more onto our lower time frame charts and wait for those price points of interest to potentially execute trade ideas laid out here. Okay? I like this little bullish structure on the 1 minute here on gold. This is really nice. We can potentially scalp and play this. So if we get back up to here, if we get a little bit of a 1862, this is a really nice little lower time frame bullish structure, right? We have economic data in 25 minutes, but if we get a little retest to this area, even a bit deeper, and still continue up, this is a nice range to play up to 1868. GJ. So GJ, just with how the hourly candle opened, we are getting a little bit more exhaustion from these highs right now, as we didn't break above 0.500, and now we're coming back to 0.200. But 0.200 we're gonna watch as a make or break point based on lower time frame price action. If we still fail to break below and create a double bottom in this area, as well as potential support, I can still see playing the buy scalps and playing the Japanese yen weakness accordingly. I think Japanese yen is just going to potentially retest this previous low and then turn back bearish again and continue back down in this fashion, as we already had a lot of sell orders collected here with this pullback phase and an impulsive low to break the prior lows, and Japanese yen individually is still pretty bearish. So I'm going to be waiting for GBP JPY reactions to 154.2, or if we break above 0.500. Not going to be touching this messy price action right now in the middle of the PPLs, as it's not really giving me any clear directional bias or a favorable trade. Remember, not every day is a trade day. You have to do your pre-planned analysis, have the confirms you're looking for, and take advantage of it. Guys, help us report these live scams going on YouTube. What the fuck are you talking about? So many haters. GBP USD. If NZD does actually raise interest rates, it is going to bring some short-term strength to the New Zealand dollar. I wouldn't suggest riding NU sells at that time. You'd have to wait for the NZD. You'd have to wait for the Reserve Bank of New Zealand sentiment to get faded out and still respecting overall bearish structure. You know what I mean? Yeah, YouTube audience is crazy. They hurt a lot of people's brains. I've been using buy limits and sell limits. Obviously, some of these entries are manual entries, right? But any of these entries that you see are at like fully rounded out numbers, or give or take rounded out numbers where I just give a bit of leeway, like this one, these ones up here, these ones at like 52, 55, 18, 20, 154, 152.99. These are like these are limit orders, right? So a mix between, I'll set limit orders if I see something favorable that can play out overnight. You know what I mean? Like if I can see something that can play out overnight while I'm going to be sleeping through Asian or London session, I'll set a limit order based on pre-planned analysis. Otherwise, the majority are manual entries. Right? Because there's good and bad with both. With manual entries, these are the positives. You can look at live price action and get more confirms for your entry. You have more capability to trade manage. You understand what I'm saying? You have more capability to trade manage and watch price action accordingly. And you can secure profits at significant price points if it doesn't look like it's going to go to your full take profit, right? But these are the negatives of manual entries. Sometimes when it's time to manually enter at your execution point of interest, you doubt yourself, you get emotional, and you miss the entry. Sometimes you also get emotional as you're trade managing and close too early and don't let it run to your full take profit because you start to get scared and doubt yourself, right? So in my opinion, there's a lot more emotions involved with manual entries, but everything has its good and bads. With limit orders, these are the positives. It's still at pre-planned analysis that you're putting your limit orders on, price points of interest that you pre-planned. So you're sticking to a plan, you're following analysis. The entry gets activated usually when you're not at the charts, right? During the sessions, when you're sleeping, when you're working, whatever it may be. So there's a high probability that there's not going to be as much emotion involved during time of actual entry activation because it's a limit order you pre-planned and you might not be looking at it there as well, right? You also have higher probability of the trade potentially running to your take profit without you intervening emotionally or closing early or so forth. Okay? Now, the negatives with limit orders, you sometimes price will come to your potential price point of interest and based on live price action, completely invalidate your trade and go straight to loss. You can't avoid this with a limit order because you're not actively watching the price action. You also have not as much capability to trade manage with your limit order in terms of sometimes securing profits earlier. For example, there's been many situations when I had a limit order, for example, let's just say I had a limit order here. Let's just say I had a limit order here on gold, right? Here. Let's just say you had a limit order here on gold, and my take profit was right at these actual highs, right? Let's just say that limit order gets activated, it misses my highs, and then by the time I come back to check, it's back to my entry. There was this potential of a period of dozens of hours where I could have closed based on price action here, clearly showing that there's not enough order flow to break out to my take profit point. And there's potential where I could have closed in 100 pips profit, 60 pips profit, but instead it came back to my entry as it was more based on a limit order and me not actively watching the charts, right? So with limit orders, with potential manual entries, there's good and bad for both. You just have to see what works for you and then stick to that, right? And again, like I told you many times before, focus on the risk management. You guys can see the little bit of a psychology lesson I gave at the start of this webinar, where I was showing you guys, like, look, everybody sees me as this extremely smart guy, very, very skilled trader, but I still have a win rate percentage of overall trades of maybe on average 50 to 65%, right? But by focusing on the risk management and positive risk versus reward ratios and keeping losses controlled as per plans, where obviously, like I showed you guys, there were some emotional mistakes I made where I extended a stop loss and end up taking a larger loss than planned because I get emotional and say, fuck, maybe it'll turn. Even someone like me, who you guys think is so experienced, still makes those mistakes, right? But the majority of my losses are controlled pre-planned losses as per my trading plan of maybe 10, 15, 20 pips. And the majority of my wins is like 40, 50, 60, 100 pips, right? So that's what the focus should be on, is the risk versus reward ratio and having a realistic winning rate. Do you guys know that manual retail traders back in the day, from various institutions where they did research on institutional win rates, the manual retail traders who are working for the big banks, potentially making millions of dollars through a position, investment, or trade, they had an average win rate percentage of 52%. But their risk versus reward ratios were 1 to 5, 1 to 10. So their wins were 5, 10 times larger than their losses. But otherwise, it was fucking, you know what I mean? Right? I'm using a bot on, what do you mean using a bot? I know my trading is not automated. My trading is manual entries based on like analysis given. You know what I mean? Yeah. I'm in the development of a CH algorithm based on GJPPLs, market structure and fundamentals, as well as a gold one, but that's not going to be released ever. I would never release that. I would never sell that. I would just use it for myself and a few secret private people, and I would just give it to them to use. He got you exposed? What are you talking about? Sometimes the YouTube chat be on some weird stuff. Yeah. Anyways, so we have that US and Canadian economic data in 12 more minutes. So that's going to have an impact on gold and US dollar pairs. Right now, there's no entry confirms on GJ, no entry confirms on GU, no entry confirms on Euro USD yet. Same thing with gold. I don't like the price action yet. If we get some 1 minute candle closures back above our little zone here and do a double bottom here, this looks pretty good as a scalp back to these highs and potentially a bit higher. But right now, the economic data won't have an impact on GBP, but it will have an impact on the Japanese yen as a safe haven currency. If you guys come and check out some of these YouTube shorts and stuff like that, I explain a lot of fundamentals very short and quick. And then you also have, if you follow this Monday market analysis, I gave you guys great trade ideas on GJ buys, GU, Euro USD, and UCAD is sick. The news is in 11 minutes. Yeah, we're gonna. I think a lot of the. I think did Raja end his stream? I think a lot of the fucking gulag hyenas are coming. I liked it better when it was just us aristocrats, smart people. No disrespect to Raja's audience. Raja's audience is very, very smart. Those are some high IQ individuals. Those are some very high IQ individuals. Anytime I go to Raja's stream just to check out what he's doing, I sometimes I just read the chat, and the chat is a fucking hilarious. GJ, gold, GJ, gold, gold down, gold up, gold buy, gold sell. People just going crazy, man. Just spazzing shit. Yeah, make sure you check out all of your Capital Hungry free resources. For all the gulaggers who just came in, we've already been going for an hour and a half, right? So for anybody who's wondering analysis, we already did trade idea analysis on gold, GJ, GBP USD, Euro USD, USD CAD, and US 30. I'm not hating on anybody's work. Me and Raja are great friends. Best of friends, even. I'm just making fun of the gulag audience. Yeah. Okay, 9 more minutes till that economic data release. Can I please analyze USD CAD again? It's the year 2021. You know what I mean? This isn't like a VCR tape you gotta manually rewind. You can just click back. you could just go to when we did the UCAD analysis and rewatch it right now. You can just rewind the stream, like it's right there. I just did a full breakdown. We did like this. I don't know how long the stream's been running. Maybe some of the people in the chat can give you some timestamps. But we went in the order of this. We did gold first, GJ, GU, Euro USD, USD CAD, and US 30. So yeah. It's a long video, hard to find. All right, you know what? Just for you, I got some analysis. 10 pips above current price, put a buy stop. 10 pips below current price, put a sell stop. No stop losses on either, and then let it go. That's for Noor. That's for Mr. Noor Amin. On USD CAD analysis. This is only for Noor Amin, not for anybody else. I'm just trying to help him out. All right? So 10 pips above current price, buy stop. 10 pips below current price, sell stop. No stop losses. Otherwise, the banks are going to come take your stop loss out. The institutions will come take your stop loss out. So don't put a stop loss. This exclusive. Yeah, that's the Capital Hungry secrets right there. Trading secrets. Yeah. All right. There you fuckers go. I don't know how. I don't know where you need to see it. I'm gonna find it. I'm gonna find it. I just drew the magic yellow lines, yo. Where'd they go? Someone send me a timestamp. Oh, here we go. There you go. There. Holy man, I got bad. There you go. All right. That's what you wanted. Double bottom. Breakout. Target this high. 25 pips right before the news. Yeah. Now what? Now what can you say? Huh? It's right there. It's right there. It's right there. Timestamp. Minus 5 minutes 7 seconds from current price point. I mean from current price point. Why the fuck did I say current price point? Minus 5 minutes from current time. Maybe 6 minutes now. See, if you just rewinded and watched the stream. Okay, but anyways, jokes aside, this gold scalp played out very well. We got the retest of that lower time frame structure we were talking about, right? Retest of lower time frame structure, 1 minute consecutive bullish highs being printed. We wanted to at least target these highs. We were waiting for the pullback of structure, which then gave some beautiful 1 minute price action of a double bottom, with the double bottom leg being created here at our buy zone, and then having the bullish candle, bearish candle breakout back up to that 1 minute high for a 20 to 25 pip range. Yeah, this is Forex trading. This is called scalping. No, I'm not trading this week. I'm already done. I already had a pretty solid last couple of weeks and month. So I'm chilling. I'm in no positions. I'm in no positions. Okay, what I want to tell you guys is hopefully you secured at 15, 20, 25 pips because we have news in 3 more minutes. And we also did not break the 1 minute high. We played the exact range up to the 1 minute high we were talking about. That's the first trade that's played out so far through the session that we called out. GJ. Okay, so GJ did not give us the 0.200 retest, but we're going to be waiting for this 30-minute candle in the news to see if we break above 0.500 for some buy scalps like we called. All right, so just no entries on GJ yet. No entries on GU. Euro USD we're still staying out of. Yeah, this is a scalping session stream. We can't swing trade through a 2-hour session and catch a 10% move through a 2-hour session. This is for the style of trading called scalping. It's been around for a long time. Bob Hayes here, so fucking confused. Never heard of leverage or forex or gold trading or scalping in his life. Fucking got a zoomer in the chat. This guy's like, well, you know what? I just call my bank and I mail them in what stock I want to buy, and then I hold that stock for the next 6 years, and then they send me a letter when it's time to take profit, you know? All right. So we might see gold drop a bit lower here, but the housing starts number data is down, and the Canada inflation is right on expected targets. Pretty boring news. You kill your viewers? I don't know what that means, Mr. Faz. Pretty boring news, not too much of a market impact. So far, we had the short-lived scalp, which played out in that 5 to 6 minutes. This trade idea, nothing else so far yet. We will need to break above 1867 to see any further buys now at this point. You know what I mean? I don't know. I don't know if that's a good or bad thing that I kill my viewers, because some people say, "Oh, you kill me," like I'm laughing so much, and some people say it as a bad thing, like, "Oh, you're hurting me." So I really don't know. GJ is just ranging right now. No entry confirms. Gold had the quick scalp. That's it. Mr. Junior Wayne, yeah, I saw that you said you're selling gold to 1820. I hope that works out for you. Okay, so the new 30-minute candle made a nice lower wick. Very nice bullish price action we can see here as well. Once we get bullish closures above 0.500, we're going to start to take the scalps. Okay, I like this bullish engulfing candle we're getting here. Closures above these 1-minute highs, and we should get some nice GJ scalps coming up here. Potentially to take up 15 to 20 pips. All right, so let's just wait for the confirms of 1-minute price action candles above with a breakout above 0.500. GU's digging a bit higher than the consolidation zone right now on some short-term pullback on the dollar, but still nothing really significant in terms of scalps to enter on these pairs. The only trade so far has been the quick gold scalp for 25 pips back to the 1-minute high, which we pre-planned as a quick scalp in and out. So far, volume and volatility today is pretty shit. Oh, finally, yo, look at this guy, Waleed. Finally a nice comment. Thank you, Waleed. I appreciate that, man. I appreciate that. No, gold, even if gold comes back down to 1855 again, I'm still looking for the bounce buys. I'm still looking for the buys. Yes, yes. Okay, so just in case we do not get trade ideas to execute on through this scalping session, right? Just because we might not have the volume and volatility to do so, as currently volume and volatility is looking pretty shitty. And we haven't had any clear confirms for further entries yet on GJ, as we're just in this lower time frame range. Remember, I gave a full trading lesson at the start of this webinar. If you rewatch this webinar, I guarantee you $100 bet that you will learn more, that you will learn something today off this webinar that you probably didn't know before. Unless you're in capital hungry already, then it doesn't count. All right, I did a full psychology and risk management breakdown, a full breakdown of fundamentals, of technicals, economic events, and trade ideas and analysis on all these pairs, right? But so far, through pre-New York and New York Open, as well as even after the economic data report of CAD CPI and the US building permits and housing starts, volume and volatility is looking pretty shitty right now. Right? So all I'm trying to say is we might not have the trade ideas that I laid out play out while I'm sitting at the screen here and doing this live stream. It might play out after London close or at Asian session or the following Asian session and overnight too, okay? So the same trade ideas I gave you guys through this session, it's not just for today. You can also use it if the analysis is still valid for the next coming sessions and tomorrow. Does that make sense to everybody? What poll? Oh yeah, the question I asked, interest rate hikes. Let's see what people answered here. Okay, who said bearish impact on currency? I want to know who said bearish impact on currency. Interest rate hikes equals a bullish impact on the currency, not bearish. It is a bullish impact. It increases the value of the currency on its global stage against other crosses. This guy just wanted the screen. You could just click the 3 dots. Yeah, gold's digging a little bit lower here, but we had our short-lived scalp. Now we're just going to let it do its pullback and do its thing. We were closing before the news, and we'll see if we come down to give a deeper retest at better buy areas. GJ, once we have 1 minute closures above 154.500, we're going to have some pretty nice buy scalps with the impulsive move, breakout, and retest, as Japanese yen is still bearish. But so far, nothing there. All right. Yeah, we already did US 30 analysis. I'm personally waiting for, you can always rewind the stream. Okay, this is the last time I'm gonna say this. I don't care which mentor you're from, which service you've used, which signals you've used. Just by watching this entire webinar from start to finish, I guarantee you will learn something new. Whether it's based on risk management, psychology, fundamentals, technicals, economic events, and whatever it may be. All right, a lot of you came late to this webinar because you were all in the gulag, fucking touching each other's ball sack in there, talking about GJ up, gold down, GJ up, down, sideways, left, right, not really fucking doing anything for each other. All right, over here, even though Raja's giving great information, Raja gives great value, but the gulaggers themselves, you guys are a mess. Somebody's got to tell you this. I'm trying to be like the big brother here. Raja's like your dad. I'm trying to be like the big brother. Okay? You guys are a mess. Gotta pick it up. I'm just trying to be the big brother. Raja, you guys can say Raja's the daddy for you guys. Call me the big brother. I'm just trying to keep you guys on the right track of putting your time and effort into developing yourself. Okay? But through this session, the first hour was pure information. Psychology, fundamentals, technicals, so forth. Yeah, Ted is the uncle. Ted is the cool uncle who stays in the back. That's why he's Uncle Ted. Yeah, Daddy Raja Banks, Uncle Ted, and Big Bro Jeev, alright? This is the family here, alright? Curwen's another uncle, but we call him Horny Uncle. Curwen's that one uncle you have who's super horny. That cool horny uncle. That's Curwen. But he's also the uncle too. That's Hornito. That's why I call him Hornito. Yeah, why do you think he got so many kids? This guy pumped them kids out. No, Curwen's a great guy. Curwen gives a lot of great value and information as well. But he's the horny uncle. Mac is that one cousin you don't really fuck with, but he's always there. That's Mac. You guys know Mac? Mac is that one cousin you don't really fuck with, but he comes to the family events and you talk to him. You're like, all right, bro, I guess you could sit with us. I got that one cousin. He's like not really like, you're like, ah, fuck. He's all right. He's dealable. Mac's funny. Mac's hilarious. Mac, that one cousin. Burner's a fellow brother, fellow big bro. Gives great advice, a lot of life advice from his experiences and so forth. All right, let's read some of these headlines. Canadian dollar weakens after the inflation data. Ghana, Canada consumer prices, because Canada CPI and stuff wasn't increased. It was right on the expectations. No, I'm talking about in relation to the gulag. To the gulag, you have Daddy Raja, Uncle Ted, Horny Uncle Curwen, Big Brother Jeev, Burner's also another big brother, and then you have Cousin Mac. That's the family to the gulag. Yeah. All right, everybody. Anyways, in terms of going back to the charts, back to the markets here, it really looks like volume and volatility is pretty stagnant and slow. We're not really seeing any clear-cut one-directional movement. We had this one scalp on gold that we pre-planned, which you can always go to rewatch. It was just about 10 minutes ago. We called it. Sorry, it was about 10 minutes before the move happened. We called the potential pullback to this area, double bottom, upside to revisit this high and break higher if we broke above, which we did not. GJ is just in a range between 0.200 and 0.500 with very messy price action on the lower time frame. No clear-cut one-directional bias for a scalp. GBP USD, you could see, had that quick impulsive move, but still had sellers jump in and still holding below that previous high and ranging right now. Euro USD is also just ranging on the lower time frame. No clean breaks below 3-1 sells. UCAD buys are setting up shortly, back above 1.258. and no trades yet for US 30. We might not get to execute. We got the chance to call the live execution and trade idea on gold, but we might not get the chance to execute on anything further through my live session because I'm leaving soon. I gotta go run some errands this morning. Okay, so with that being said, all of the trade ideas, analysis, fundamentals, and technicals given at the start of the stream are still valid and still relevant, and you can still use that through the remainder of the session if we get to those price points of interest like talked about on gold, GJ, and the other pairs, and for the following sessions. Make sure to watch the Monday market update webinar and then complement it and follow it with the YouTube short given, which will give you more information. So first, watch this Monday market analysis webinar, which a lot of this analysis on gold and the other pairs is still valid. Then follow up with this GBP short to understand why GJ has been a bit more bullish, and then watch the start of this webinar, the first hour, which we did a full breakdown and analysis. Okay. But other than that, besides this gold trade so far, it looks like we should be sitting on our hands as we don't have any other further trade ideas to execute on. Okay, so no point forcing a trade just because we're watching the charts, no point over trading, and no point over leveraging either. I will see you all on Friday for the Friday self-development live video. Thank you for your support. Thank you for coming. Let's get 300 likes and I'll do another live stream tomorrow, or I'll come on Raja's stream. Let's see if we can get to 300 likes and I'll come give some fire on Raja's stream tomorrow. All right, but anyways, everybody, thank you so much. Thank you for attending. Make sure you rewatch and use all that information. And I will see all of you Friday. Thank you, everybody. Take care. Have a great day. Have a great afternoon, morning, night, depending where you are in the world.